Coming up in today's show, we'll be talking about some key economic data that's coming and how it could impact the commodities market. We'll be talking about gold, silver, oil, the US dollar, and we'll be talking about China, what this could do to the commodities world, as well as the Middle Eastern tensions, which clearly have an impact on things like oil, gold, etc. We'll also be taking a look at price action setups, so make sure you stick around to the very end and hit that thumbs up button as we start today's video. Let's jump in. So before we start today's video, I just want to let you know that if you have not already picked up a copy of the Edge Finder and you're a regular viewer, we currently have a huge discount going on. We are doing 45% off. To get access to the tool for such a massive discount, all you have to do is click the very first link in the description and chat with someone on my team who will get you set up with a copy. We're doing a really short-term, huge discount on the tool, and the reason for this is because we do plan to price hike the Edge Finder this year. We are restructuring the pricing, and we're trying to do a sale event to let people pick up a copy before those prices do go up. So if you're somebody who's been thinking about it, take advantage. So first of all, we can take a look at the overall market reaction here this morning. We see the S&P 500 slightly up, NASDAQ pretty choppy on the day. You've got the US 30 or the Dow Jones doing okay today. You got the dollar index poking up against resistance. You've had the euro just sliding hard off of fear of recession there. UK also, the pound USD, and the gold market seeing some rejection here at the $2,036 an ounce mark. Same thing with oil, coming under some pressure here recently, and we'll talk about all of these things as we get into today's video. But before we talk about price action, we need to be aware of some of the key economic data coming out this week that will very much impact your trades if you're trading things like gold, oil, the dollar, silver, etc. Check this out. So on Tuesday, so today's kind of a wash. You have a really quiet start to the week. However, you have JOLTS job openings. This will give us some job data. We have consumer confidence Tuesday, and we do have some CPI numbers out of the Australian, but also key note, if you play commodities, you need to be watching China, because China is a huge consumer of basically commodities in general, especially Brent crude oil and copper, etc. So what we see here is that manufacturing PMI numbers from China will be coming out on Tuesday. That's actually a key indicator if you're somebody watching the metals market. We push on and you can see Wednesday is the big one. Wednesday, we have ADP non-farm employment change in the morning. That will give us an advanced look at what NFP could look like, although this has been historically pretty inaccurate recently at predicting what jobs data will look like. However, the big one is at 2 and 2:30 p.m. respectively. We have the Fed funds rate, their decision on interest rates, which is almost certainly going to remain unchanged this time around. But what's key is the statement and the following press conference. These two things will give us a massive inclination of what the metals market will look like, as well as the oil and the dollar market as well. What Jerome Powell has to say during this press conference will massively impact markets. More on that in just a moment. On Thursday, you get the Bank of England's decision in terms of their bank rate. It is expected to stay unchanged. However, what should be noticed is that this number is probably the most important factor of all of this. And the reason for this is the bank rate votes. This is going to be whether or not the Bank of England plans to rate cut or rate hold their rates at a steady level going forward. And this vote from their council that does this, right? The people in charge of making that decision, where they're feeling and where things are going next, will likely be reflected in this number, which will be really, really important, as the market, remember, is forward looking. We also have claims out of the United States, unemployment numbers and PMIs, manufacturing PMI on Thursday as well at 10 a.m. Eastern time. And finally on Friday, there's another big one. We have the NFP jobs data that comes out 8:30 a.m., as well as consumer sentiment on that Friday as well at 10 a.m. So needless to say, this market is going to move like crazy this week. This is a huge week in terms of economic data, probably the biggest one we've had in several weeks, and pivotal to whether or not gold moves up, down, sideways from here. And as we get started this week, what you need to know is that the gold market is rejecting hard as we start out the week. This is something worth noting. There was some fear over the weekend about what's going on in the Middle East. In fact, let me just pull that up really quick. Biden vows response after drone strike kills 3 U.S. troops in Jordan. Obviously, to say the very least, this is an escalation of things, and if the US does have some sort of aggressive response, which I think could be likely, it will likely cause confusion and concern about what's going on in the Middle East next. And my point with that is that when there's fear, confusion, and uncertainty, we usually see the gold market spike, which is exactly what we saw over the kind of weekend open. We saw a big push to the upside on gold. Again, we ended the week last week down here. We shot up off of that news, and now we're giving back some of those gains. Again, I think that a big argument here for why we're giving back some of those gains is because this week is so pivotal in terms of economic data. And so at the end of the day, yes, there's concerns in the Middle East, but what really drives this thing to continue higher is further escalation, which we have not yet seen. So I think the market is kind of falling back on this and saying, well, we still have key economic data, which could drive this thing dramatically lower. For example, if you get jobs numbers, if jobs numbers are really, really hot, and Chandler, can you add like a fire emoji or like something aggressive there on our jobs number? Yeah, if that number comes out hot, here's the thing. That definitely puts a damper on the idea of rate cuts. And if you're talking about gold, silver, etc., it's all about the rate cuts this year. If you do get rate cuts rapidly and soon, it will likely drive the price of gold higher as the dollar will weaken dramatically. But if you don't see that, if the dollar stays strong, it's likely to break gold to the downside off of the idea of, hot jobs numbers, economic data keeps coming in strong, they might not rate cut. If that rate cut gets pushed back further and further, the price of gold probably drops. And I think we're in a range-bound market here, but we'll get some decisions this week that could change that. We could actually see, if we do get strong jobs numbers, a break through the lows. And if that happens, I think selling the retest could be an interesting strategy, and it'll be something that I'll be personally looking out for. On the flip side, if you get mild jobs data, but more importantly, if you hear from Jerome Powell that things are, still on course for rate cuts, you might get a breakout the other way. And that's where things get really interesting, and that's why this week will be so volatile, is we don't know what he's going to say. But we will, however, get some ideas from Wednesday's press conference as well as Friday's jobs, which will really pivotably show us, hey, are we going to break out higher and start trending up, or are we going to, hey, break out lower and trend down? So it'll be a really key week on that front. And again, something not so great for the metals bulls right now is that the US dollar is breaking out here higher as we record this video. What we can see here is 103.7 is yet again back in play. When this dropped last week, I mentioned that I think we would see support. We did in fact see support on the dollar index, as we have historically seen a lot of strength around the 103.2 level. But now what's key and pivotal here is how we react as we trade above this 103.7 level. Again, you get something strong out of, or you get something more hawkish sounding or less dovish more likely out of Jerome Powell on Wednesday, it's likely this dollar moves continues much, much higher. If, however, you get something opposite, we're probably back in this range and back to neutral territory. But it looks increasingly likely that the dollar is trying to push out to the upside on all this strong economic data we've been reporting on the channel recently. And a quick look at silver, it's much the same. It's been range bound, although, this one being a little bit more volatile will likely move quite a bit on what we hear on Wednesday and Thursday. Again, we do our chart markups here really quick. It's kind of the same concept. You've been very range bound here recently. This is a 4-hour chart. We do have some support here, arguably around the $22.7 an ounce level, and we've had key resistance here come into play right around the $23 mark. So should be interesting, again, for silver bulls or bears to watch for breakouts one way or the other, depending on what we get out of the US. And I should add the US and China, because China, as I mentioned, is a key player here. If you do get a rebound in the Chinese economy and the stock market, they've been recently implementing new ways to try and stimulate their own stock market, which I'll pull up an article about so we can get a closer look. China's economy has recently experienced slowing growth, prompting the PBOC to implement new stimulus measures. Wednesday morning, the central bank announced a 0.5 percentage point decrease in the reserve ratio requirement for Chinese banks that frees up about 1 trillion yuan, or roughly $140 billion for banks to lend. It's no small amount, at almost 1% of expected economic output in the country for this year. It seems pretty clear that the Chinese government has looked at their stock market and said, well, hey, this is looking terrible compared to the rest of our Asian counterpart countries, as well as the Western world, which is thriving and seeing massive stock market runs. they're probably not happy with how their stock market looks, and so there seems to be some stimulus efforts to try and rebalance their economy. If that does start to play out, if the Chinese economy comes back into play, that could actually be a huge bullish factor for the oil market. And it's part of the reason why I actually have a bullish position on oil right now. It has not started out pretty. I'll show you guys this. Last week I made some good money on oil, but I have entered back into my position. By the time you see this video, I might have already gotten stopped out, or this might have rebounded, but I like this supportive zone. I'm trying at this level, small stop. If I get stopped out, I'll probably lose about $500, which, yes, is a lot of money, but I'm working with a larger capital basis, so it's nothing huge on the account. Looking for this uptrend to continue. We've had geopolitical tension in the Middle East. We see China potentially making some moves to try and stimulate their economy, which, you know, is a mixed bag on whether or not that works. There's some skepticisms there. However, we also have U.S. strong economic data. So I like the case right now for a bullish move in oil that continues to surge. We'll see if that does in fact come out, but there's your full commodities room. We've looked at silver, we've looked at gold, we've looked at oil. There are other ones that we could cover, like platinum and copper and uranium. But for fun, let's do URA. This is the uranium ETF. I know very little about the uranium story. However, it has been a massive market here recently. And if you're talking commodities, it's probably the best performing one that I can think of off the top of my head. Massive run overall. We've seen a pullback recently. Will be interesting to keep an eye on uranium stocks. Not something we usually talk about on the channel, but hey, maybe we'll dive into that. If you want to hear more about uranium stocks, if you're interested in that for whatever reason, if you're a commodities bug like myself, let me know. Type the word uranium and comment it down below in this video. I'll try and heart your comment.
This is how you spell uranium for those of you who need to know.
Just to show you that I saw your message, and I'll also try and maybe cover some uranium. Why not? Seems like an interesting market to talk about. Or should I say a pretty nuclear topic.
Oh, brother, this guy stinks!
Okay, so what's next? So looking back on gold for a second, we've been seeing this kind of triangle move where price has just been stuck in a range, but I was curious this morning as to what sort of bank research teams think about gold and where it's going next. And we actually have that data now pulled into the Edge Finder. So what you can see is you have several different research teams like CitiFX, Goldman Sachs Global Investment Research, and their overall respective forecasts for the price of gold. What we've done is we've taken all of these key bank players. You guys on my last video let me know that you really liked this new feature, and so I'll show it again here today as we discuss gold for our metals market rundown. The monthly average here in terms of what these teams are generally forecasting for seems to it is 1972, which is lower than current prices. So it's fair to say that it seems like there's some bearish expectations for gold going forward. 1972 for the monthly average, 1989 for the quarterly average. This feature is available, like I said, with the Edge Finder, and as I mentioned earlier, do not miss our flash sale. It is 45% off. The link is the first one in the description. Chat with someone on our team, get 45% off just by sending us a DM. Click the first link in the description. And again, very cool tool. You can select if you trade currency pairs. There's all sorts of currency pairs. We even have some Bitcoin forecasts, which I thought was really interesting that we were able to pull, and gold as well. So yeah, take a look. And on today's live stream, I had a guest, well, two guests, Frank and Ivan, who joined me on the call. And we were discussing a little bit about how key this week is for metals as well as other markets. And we talked specifically about what the Fed funds rate is expected to do and why it is so key in the upcoming March meeting. Check this clip out from when Ivan, Frank, and I were talking about it.
The market has priced in a first rate, 100% rate cut in March for euro, and then there is a 50-50 chance they're going to cut. The market is going to cut in March. So right now, when Powell on Wednesday says either way, this is now going to move. So yes. Right now we have a 50 chance of dollar bullish or dollar bearishness.
I think Ivan, what you said there, that is the source, point blank period. That is the source of this week's volatility, is the chart that you've got pulled up. Whether that swings to the left or whether that swings to the right, that's what's going to cause everything to move violently. So should be very interesting and an aggressive week ahead. Finally, I do want to say, if you have not already joined our Telegram channel, you can join it now for free. There's a link down below in the description where you can get daily tips, ideas, tricks, tricks. You get all sorts of cool stuff. Come join us inside of the free Telegram channel. Again, it's linked down below. We put out charts and all sorts of good stuff. So see you there. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, Eightcap. Eightcap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your Eightcap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out Eightcap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.